Hey everyone, thank you for joining us today. My name is Alex Daredia. I help people buy, sell, and invest in Kern County. And today I want to invite Joe to hop on the chat with us and take time out of his busy day. Joe's been lending since 2001, going on 21 years of experience. And he got into lending straight out of college. So, Joe, thank you so much. Tell us a little bit about yourself.
Hey, Alex. Good morning, man. Thanks for having me. I
Hey,
look forward to
absolutely.
chat with you for a little bit.
Yeah.
So, just a little bit about my background. Like you mentioned, I got into lending maybe about 21 years ago, and seen a lot, been through a lot. There've been some crazy markets, and coincidentally, we're right in the middle of a big change. So,
Yeah, we are
uh,
in the middle of a very big change. I do agree with you.
yeah, we are. So, I'm putting my experience to use as best I can.
Hey, no, thank you, man. I've been selling for some time, but definitely not 21 years. That's hats off to you. So, you absolutely love what you do, and that's why you're still in the industry and obviously killing it. I'm sure.
Yeah, well, just helping people. I like, especially right now. I
Yeah,
mean, you
yeah.
have to kind of fight a lot of external factors and rumors and what's on social media.
The
My
media.
friend said this, my dad said this, so
I
you
agree.
have to educate people the best you can,
Yeah.
first and foremost. And that's what I try to focus on. Good market or bad market, but right now there's an emphasis on education and understanding kind of what we're in.
Right. I know. I couldn't agree more. So, the one of the first thing I want to ask you is, so as you know, I sell real estate, like
And
I
of
show
course,
people houses and whatnot. Why did you choose to go into lending and not real estate sales? And I'm kind of glad that you went into lending because now
well,
I agree with you. But I'm just curious.
that's funny.
Yeah,
Well, to be honest with you, I dabbled a little bit.
you
Um,
did.
I I do have my real estate license. It's just non-affiliated. I don't use it. But
Okay.
to be honest with you, it's just personality. I did a little bit of real estate. So when we had a crash back, a long time ago, um,
Well,
I
which
was
crash are you talking about? Because I'm sure
I
you've been
know exactly.
right?
I know I've been at it for so long. I've seen too many. So this started in, that crash started rearing its ugly head in like '06,
Okay.
'07. That's when it started. Then it came full bore, '08, '09, and started to relax after a few years. Um, when that one happened, a lot less experience on my side. I really hadn't seen anything like that. I guess none of us had, but in particular me, I wasn't exactly sure. I was new to management at the time.
Oh wow.
I got promoted in '05, and I'm like, well, what a great time for a promotion.
How old were you back then, if you don't mind me asking?
I was born in '82. So when I started in this industry, I was like, I think 19, something like
Okay.
that.
Okay.
Um, I was in college.
Okay.
My degree was going to be in business. But
Okay.
no, I never finished. I love this so much I dropped out.
Okay.
Hid that from my parents for a little bit because I didn't want them to know that I completely stopped going to school. But obviously, it worked out. But at the
Yeah.
time,
Yeah.
I had a regular job. This was working at this and going to school at the same time. It was just too much,
Yeah.
and I loved this, so I just bailed out.
Okay.
But yeah,
Okay.
going back to it, when that particular crash hit, we were trying to find ways to keep the lights on. I mean, it was a really difficult time. Everyone's losing their house. The global economy, let alone the United States economy, was in some rough times.
Yeah.
So, you know what? Let's try real estate a little bit. So, I did that for a little bit. It gave me a glimpse of, and keep in mind, it was a different market, a lot of short sales, a lot of foreclosures, a lot of, it just wasn't a healthy market. It was just everyone you talked to was either under duress or depressed or this terrible, or, it was just a tough time. So maybe it was the timing, but I just didn't enjoy it all that much. I felt like lending was more my thing,
Okay.
more into the numbers side of it.
What was your major and when you were in college?
It was going to be business administration.
Okay.
Yeah.
Okay. That's probably
So I
fine.
did all my business stuff. I did like the macro, micro econ. I did the accounting. I did all that. But, I hated going to English. That wasn't fun.
Yeah.
But
Yeah. No, same here.
it
I
was
have a degree in business as well, and I
okay.
feel I wanted to do lending, but I just enjoy being out in the field. I think it's been a fun ride for me so far.
So that part of it was, that was okay.
Yeah.
I had typical situations where, you're looking for houses for 6 to 9 months and it just doesn't work out. And there was just certain things that I was like, man, that's kind of interesting. So yeah, I think I enjoy the number side of it more,
Yeah.
the financial planning of it a little bit more.
Yeah.
But why someone would love to be a realtor, I could see it.
Yeah.
It's hustle, it's bustle, it's out and about.
Yeah.
You're helping people buy something that's, kind of usually their forever home.
Yeah.
And the excitement rubs off. Like you see their enthusiasm, you see their excitement.
The
And
feeling never gets old. I just had a closing yesterday and she was so happy. She was so grateful. And I was so happy for her also, which is, I mean, you would think it would become a norm for us, right? Because we do closings so often. But every time I hand over keys or a closing packet, it's just that joy is still there.
yeah, and that was the awesome part of it. That part of it is really exciting for sure.
So, I take clients out and I was on a phone call with the client earlier today. And one of the common questions I get is, Alex, market is not doing so well. We all know. And I says, yes, we do. Should I buy a home now or should I rent? So if I was a buyer and asking you, hey, Joe, I don't know, should I go buy a home now or should I rent and wait it out? What would be a sound advice for somebody like that?
Well, what I don't like about that question is when people make it, singular, like one answer for everyone. I don't think it's like that. I really don't.
So give me a
I
couple
think,
of scenarios.
Yeah, I think it's more depends on you,
Okay.
Are you ready? Are you financially ready?
Yeah.
Are you financially responsible? Buying a home is something that's, it's a lot of responsibility behind it.
It does.
So maybe you're absolutely ready now. You've been renting for a while. Rent has not gotten cheap. It's skyrocketed.
Yes.
Going back to that time period we were talking about, everything was crashing back then, but rents never did. They kept going. They were going up in 08. They were going up. They're up, 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 up. So let's say you're renting somewhere for $1,600 a month, $1,800 a month, $2,000 a month.
Yeah.
I don't see how it would be a bad idea for you to buy a home. You're ready. You had a little savings. You've got a nice steady job.
Yeah.
You've got a family on the way. You got a baby that needs its own room. That could be a number of reasons why you need a house today. And the market isn't a bad market. I understand that the rate climate makes people nervous because it's going up, but I'm sure you've heard the saying, something about, marry the house, date the rate. I'm sure you've heard that one
a lot lately. Yeah.
Yeah, that's the common one. I agree with that one. I mean, the house is a forever thing and the rate's not. So if your situation's right and it makes sense for you, this is not a bad market. This is not 08. This is not 09.
So tell me so that was going to be my follow-up question, right? So how is the market doing? So in your opinion, this is not a bad market.
I don't think so. I just think it's a shock to everyone because of, the influx of higher rates in a rapid amount of time. Like it's been up, up, up for a while.
Yeah.
And it's still going up.
It is.
And no one exactly knows when it's going to come back down. So I think that makes people a little nervous. But, here in Kern County, I don't see values crashing at all like they were then. Remaining the same, going up a little bit. Why do
you feel that way? The prices won't be crashing, just for somebody that has no knowledge in the business.
Well, I think it depends on your economy. So if you're in San Francisco and you're listening to us, hi, by the way, but I don't think that I can say that for that area. I know that area is getting hit a little bit with some declining prices, but in Kern County, we're really not. Our economy is pretty strong. People are still working pretty strong. There's a big influx of people coming here because of how affordable it is here.
Yes.
So, I pull up reports and I don't see our values going down at all, let alone crashing. So, I'm not really seeing that right now. And then my other part to that, I would be talking to the client about is, do you plan on selling soon? Because if you're not selling in 6 months, what does it matter? It doesn't matter at all. If you're going to live there for 30 years,
or even 5 to 7 years, right?
Yeah. I mean, that was, I guess, an exaggerated amount of time, but yeah, I mean, 5 years is plenty. In 5 years, you'll have equity for sure, because just like the stock market always manages to go up over time, so does real estate. So, and then I also tell them, hey, I see that you own a truck. you bought a truck for $60,000 and in 5 years it's worth 10.
Yeah.
If anything, I would be more worried about buying that big truck that you just bought that's going to be worth almost nothing. And, a lot of people don't blink at that. They can't wait for the new car.
Yeah.
But they hesitate to buy a house that's going to be worth more. So I'm like,
Yeah.
that's a comparison that I like to make, in
I
which you
agree.
could buy a big investment that I can guarantee you will be worthless in 10 years. And you can't say that about your house. Your house is not going to be worthless in 10 years. It's just not. It's going to be worth more. So,
Okay. So what is the interest rate? Did you get a chance to pull that up before hopping on the call?
right now you're around mid sixes,
Okay.
somewhere around there. Which at this time last year, you're talking in the threes. So that's where people's nervousness comes from, is
Right.
that
So do
much
you think
higher.
that will lead the sales price on a home to go down? And if so, how much do you think it'll go down?
I think it definitely can. I think it definitely can. Like I said, it depends on your area, it depends where you're at.
Yeah.
When it's all said and done and the market stabilizes because rates relax, I mean, you could see anywhere from single digits. You could see maybe like a 5% increase or decrease or something like that.
Yeah.
Or, you could see something in the double digits. But, a crash, 25%, 30%, something like that, I just don't see it. There's not a huge amount of the population with adjustable rate mortgages, which everyone had one then.
Yeah.
No one had any equity then.
Yeah.
But pretty much anyone you talk to right now, will tell you they have equity.
Yeah.
So you just call Alex and you sell your house.
Right.
Yeah.
I appreciate the plug. Thank you.
Back then you couldn't do that. Hey, Alex, sell my house, and you'd go, oh, I can't.
Yeah, no. So that's the thing, right? People have low interest rate right now, locked in, have equity. No one's walking away. I think so. I pull numbers right before our calls. I'm noticing about an average of 150 to 165 homes being sold every week in Kern County, and this is just single family residents. That's a lot of homes. You're looking at about 500-600 homes every month, and with the current interest rate, that's a big moving market, if you ask me.
Yeah, it shows you that there's still some health to the market.
Of course.
And we're stabilizing a little bit, things will settle down a little bit. But the other thing to keep in mind too is how much we have appreciated. We've appreciated, what would you say, over the last few years? Maybe 30%,
35, 40%, somehow.
Yeah, I mean, it's
as high as 45%.
Yeah, that's insane. So if you appreciate 40% and you give back 5, well, you're still up 35. It's not terrible.
I think it's okay.
Yeah, I think it's not bad. So, in the grand scheme of things, like we said, it's a long-term investment. If you're not selling it in 6 months, then I don't think there's a whole lot to worry about.
So the other thing I want to talk to you about is rate buy down. Can you tell us a little bit about that? Because I'm a listing agent, right? We list properties, and I feel like it's better to help the buyer buy their rate down versus doing a price drop by $10, $15, $25,000. What do you think?
I think you're right on, Alex. I agree completely with your thoughts there. So
how does it work? Tell us a little about that.
There's a couple different ways. You can do a temporary buy down, which is just for a certain amount of time, or you can do a permanent one, which is for the entire life of the loan. So that depends more on your situation, which one you gravitate towards.
Okay.
Maybe you want a lower rate for a couple of years, and let's say that your significant other's in college. She's going to be a teacher soon. He's going to be a teacher soon. This payment's not going to stress you out at all in a couple of years. But today, it puts a little pressure on you. So maybe temporary buy down, get that rate down a couple percent, get that lower payment for a little while, a couple of years, and then in a few years you're ready to go and you have no anxiety whatsoever about the payment. Maybe it's different for you. Maybe you have a situation that's not changing. Your income is what you think it's going to be. So then you need to make more of a permanent decision. Like, okay, let's buy this rate down for the entire 30 years
duration,
so that we know that we have that lower payment forever and we don't have to worry about it going up one time. So, it's a conversation to have with the client. Again, no one's had the same scenario. So you just talk about it and see what makes more sense. But a buy down is a great idea, depending on what you're doing.
How much rate can I buy down and how much does it cost?
That's not black and white.
Variable answer?
Yeah, it's, so for instance, here's an example. Let's say you want to spend 1%, which 1% obviously varies, but let's say your loan amount is 300,000. So let's say you want to spend $3,000 allocated to buying your rate down.
Okay.
That's probably going to get you anywhere from 0.25% to 0.5%, depending on what program and what you're doing.
Okay.
So let's say you're at 6.5. You spent that $3,000 to get to 6. And then it's my advice to look at the investment and make sure that it makes sense, because it doesn't always. Sometimes I'm telling people, I don't think you should do that.
Okay.
Here's why.
Yeah.
Here's the math. You're saving $20 a month, but you're saving $3,000. I don't think it makes sense. That kind of thing.
Okay.
Or you're saving $60 a month, $50 a month, and you're spending $2,000. I think it makes perfect sense. Yes, let's talk about it. Let's do it. So it's, return on investment, basically.
So you would help them make that decision and
absolutely, yeah.
Options, right?
Absolutely. I give them my advice. I show them the numbers, and ultimately it's up to them to decide. But it's something you need to walk them through for sure.
Yeah. So it is better. It is better to do a rate buy down than just drop the sales price by thousands.
I think that's a huge benefit. So if a seller is looking to do a reduction in price, I would do a reduction in payment. Say, hey, let me reduce your payment.
Yeah.
Instead of reducing the price. Because as you know, values have not been really decreasing. So
yeah,
you don't have to do that, but you can contribute towards a buyer feeling a little bit better about their payment. So I think that's a great idea. Yeah.
Yeah. So, okay. So a great question to ask is, tell me about my rate buy down option for anybody that's out there listening, right?
Yeah, absolutely.
So favorite loan product?
Oh man.
Or what are some of the loans out there?
If I had to pick one, well, there's a ton, especially if you're a first-time buyer. But you have your FHA stuff, which is probably my favorite. And the reason it's my favorite is because it's tailored toward first-time buyers.
Okay.
And I tend to really like working with first-time buyers, just because of what me and you talked about at the beginning.
Yeah.
Just, they're excited.
Yeah.
This is a big step for them. Sometimes it's not been generational, like, hey, I'm the first person in my family that's going to ever buy a house, so it means a lot to them.
It does.
And that's just exciting, so an FHA loan that's geared towards a first-time buyer, that's just more exciting for me just in general. So that's why I would say it's my favorite.
Okay.
There's down payment assistance options, that are tied to that. So if you need some help with the down, you can do something like that. There's, some programs that are geared towards specific people. So like a VA loan for a veteran.
Yeah.
Fantastic loan program. Obviously, we have a ton of respect for anyone that's served, and that's a great program to, the way the government kind of gives back and gives them a fantastic loan product. I think VA is probably the best product out there.
Really?
Rightfully so, because they deserve it. A lot of them are still injured. I'm talking to them, and it's like, my arm's messed up, my foot's messed up. I mean, what better way to thank them for that than giving them the best loan out there, that they definitely earned. So, and then you have, some of your regular stuff like conventional loans for maybe an investor or someone that's got a little bit more money saved up or in a better credit situation, or maybe a second home, or something a little bit more rare like a USDA, which is more driven on the location of the property. So more for, a rural area. We've got a lot of that in Kern County. So
we have a lot of that, yes.
So say, you're out in a more farm type community, and we're big in agriculture around here. So, that's a more specialty product, USDA type program. But, one thing that this change has not done is taken products away. Products are still there. We still have programs for investors, programs for self-employed people that, want to qualify off maybe bank statements instead of tax returns. So there's really a ton of different ways to finance a property right now.
Okay. So let me ask you this, right? Closing cost. Define closing cost and a buyer, what number should they run with? Like a general, very base rule of thumb.
Well, when you're talking about closing costs, it's split up into two buckets. So it's your actual closing costs, which are, you're paying for services, escrow fee, lender fee, appraiser, stuff like that.
Okay.
And then you have prepaid items. So you have taxes and insurance. As soon as you move in, you've got some taxes to pay to Kern County. You've got insurance. You know, you don't want, God forbid, something happens to the house, you need to be insured. You know,
Right.
so that's split up into those two different buckets. So you got your closing costs and you have
Yeah.
your prepaid items.
Okay.
And, you know, generally speaking, from what I see and hear in my experience, people generally use 2.5% to 3% for closing costs. Could it be 2%? Yeah. Could it be 3.5%? You know, say you're doing a down payment assistance loan and you're taking 3 loans out, because there are programs that will help you finance the down payment and finance the closing costs.
Right.
So you're, instead of taking 1 loan, you're taking 3 loans out. So then your closing costs would be on the high end because you have 3 loans. So, you know, there's a little bit of a up and down there, but I'd say that's a general rule of thumb.
Yeah. Okay. So, okay. That's so 2, anywhere from 2 to 3.
Yeah, around there. Yeah, that's a good general idea too. And you lump them together. So
Right.
prepaid items are also due at closing as well.
Okay. So the other thing I wanted to ask you was, since you've been through the downturn, right? I think we kind of touched a little bit on this.
Sure.
Where do you think, or how is this different from the other downturns in the marketplace in the past?
It's much different in many ways. For instance, I think we talked about it being a pretty healthy market still.
Yeah, I think so.
You know, you can decide to sell your home tomorrow, and you can, you know, you can list your house up for sale. There's buyers that want to buy it. There's people that can qualify for it. You know, back then it was such a difficult time because, like I mentioned earlier, everyone's under duress. Either you were getting laid off from your job, or you bought a home for $300,000 that was now worth $200,000, so you didn't have the equity to sell it,
Right.
or you couldn't find a buyer to buy it.
Yeah.
It was just a really difficult time. Or you had, like we mentioned, the adjustable rate mortgages that were a big piece of the market then. You know, your payment was $2,000 a month, and now it's $3,000 a month, and you can't afford it anymore. You know, it was just a lot of, just everywhere you looked, there was just real madness everywhere.
Yeah. You know, I want to ask a quick question on adjustable rate mortgages. You guys still offer that product, right?
Yeah, it's rare. I tend to push people more towards the buy down than the
Okay.
adjustable rate mortgage, just because I feel like that's maybe a safer route.
Right. But the adjustable rate mortgage, is that the same product from when it was being offered in 2008, or they've
So
tweaked it, made it better?
big difference is now you have to qualify for it.
Okay. Okay.
Yeah, back then, banks were coming out with this product, but without any qualification. I mean, they didn't check if you made enough money to afford the payment. They didn't really check if you had any reserves or assets. It was, hey, walk in the door and we'll kind of give you a loan. And it was nuts.
Yeah.
You know, I was.
So now, no more.
I was newer then, so I didn't really understand what was going on when all that kind of came out. But now it's, you know, if you walk into, let's say my office, and you're going to get pre-qualified, you know, you're going through some steps. Your credit needs to be okay. You know, you're proving that you can make that payment. So then the likelihood of someone losing their home is a lot less than it was then, because they are qualifying for that house.
Yeah. Okay. So, you know, Joe, you obviously been in the industry, man, 21 years, sometime, right?
Yeah.
2 things, right? 1, advice for anyone that wants to get into real estate sales or lending. And the second is, what do you advise for people that are currently in the business, right? About their mindset, what's going on, and just, you know, a few thoughts on that.
Okay. Well, newbies, like we like to call them.
Yeah.
I would say make sure your heart's in the right place.
Okay.
Because if it's,
we'll elaborate on that.
Well, what I mean by that is, you know, there's a lot of people out there that maybe get a little caught up in the allure of what we do and less in what we do for people. And I think that's got to be the backbone of it. You know, you got to really want to help people.
Yeah.
Because there's a common misconception that real estate and lending is easy. You've done other things, I've done other things, and this is not easy. There's a lot at stake. It's the biggest purchase of probably someone's life, and there's a lot of emotion behind that. And, you know, I just would tell anyone new, you know, do you really see yourself loving this? Do you see yourself doing it long term? And is your heart in the right place? Do you really want to help people? Because if not, you're kind of cheating yourself and cheating clients because you're not giving them what you really want to give them because, you know, do you really love what you're doing? I'd say that for anything, whether you're going to be in real estate or something else. I would say, hey, whatever you're doing, love it.
Right.
That way it really resonates and comes out that way, as opposed to you're, you know, maybe you're cutting corners, maybe you're being lazy because you really don't kind of like it that much.
Yeah.
And, you know, all of our clients deserve the best service. So if you love it like you do, if you love it like I do, then our clients are going to get the best from us.
Yeah.
And that's what they deserve.
Yeah.
You mentioned, you know, current agents, someone that's already in it and has been through it and kind of knows. I would say always continue to challenge yourself to get better. You know, never get comfortable, never think you always got it figured out. You'll never hear me say, oh, I know, I've been at 21 years. I know what I'm doing. Like, hey, you never know when something's going to change. You never know when a guideline's changing. You never know when you know, every borrower that walks in the door is different. So, you know, you can't say you've seen it all, even though it feels like it sometimes. So I would just say always continue to challenge yourself to be better, because the better you are, the better service you're providing. So, you know, I think it's always good to challenge yourself, make sure you're always, you know, at the top of your game to provide that kind of service to someone like you who needs a partner to do lending with, or a first-time buyer that just needs someone to show them what buying a home's all about.
Yeah, no, that's great advice. That's great advice. So before we start wrapping this up, one of the big questions that I want to ask you is, Feds just raised their rates yesterday.
Yes.
Right? This is September 22nd, so they did it on 21st. And every time they do that, it blows up on the media, right?
Oh yeah, everywhere.
And it blows up on the media. So the big question is, when they raise the rate, does that directly affect the mortgage interest rate?
So the short answer is no.
No.
And let's talk about why it's no. But yeah, you're completely right. This is not the first time this has happened this year. It's happened multiple times.
Right.
0.75% raise is huge. That's not normal.
Correct.
Yeah, that's not normal, especially since we just had one not that long ago. So you're talking a 1.5% raise over a matter of a couple months. That's huge. You know, you go back in history, that doesn't really happen.
Right.
So my phone blows up all the time, you know, screenshots, you know, look at this. What's this? What's this mean? You know, my rate tomorrow is, you know, going to be that much higher. And again, the answer to that is no, because it's pretty common knowledge in advance that it's going to happen. It's not so much of a secret.
Okay.
So rates go up over time. So for instance, you know, that 3.25% raise that we saw yesterday, it didn't magically go up 3.25% today. It had been going up over time and really already happened. So for instance, yesterday, the rates go up, a lot of panic, but our rates barely moved yesterday.
Already done.
Yeah, it was pretty much just yesterday.
Yeah.
And that's because it was already kind of taken into account, you know, people on Wall Street, people that move these kind of things, they already knew it was coming. So our rates had already kind of absorbed that. Yeah.
Because, I mean, it has to be, okay. That makes sense. So it doesn't. So people need to stop panicking when they see Feds raising the rates on CNN or Fox and stuff like that.
Yeah, exactly. I don't know if you've heard this before. It's on an album of Drake's. If you're reading this, it's too late.
Yeah. If you're hearing it or reading it, it's too late. You already
it already happened. It already got taken into account. So there's no need to panic today. It already happened.
Yeah. Awesome, Joe. Well, hey, thank you so much for your time. How can one get a hold of you if they have questions about lending, or they just want to run a scenario by you? Just, I mean, I'll be able to put your information in the description, but I think on here would be nice too.
Yeah. So again, my name is Joe Navarro. I'm with Signature Home Lending here in Bakersfield, and I could just give you a couple direct lines. So my office line is 661-370-0563. 3700 Joe, if you want to memorize something.
I like that.
3700 Joe, or my cell phone, which is 661-343-1130.
Okay.
You know, I just try to provide value any way I can to anyone I talk to. So, you know, it doesn't even need to be all about loans, you know, financial advice, or talk about the market like me and you are right now.
Right. It helps.
Like you mentioned, me and you, we love what we do. So when you love what you do, you can really talk about anything with anyone,
Yeah.
and make good of it. So, if anyone needs anything, I'm here.
Awesome. Fair enough. Well, hey, everyone, thank you so much. If you guys have any questions, whether it's sales or lending, feel free to reach out to either Joe or myself. Once again, my name is Alex. I work for Century 21 out in Bakersfield, and we'll talk soon.
Thanks, guys.